Good morning, how are you guys? Nice to have you with me this morning, April 29, 2025. Going to take a look at the markets, see what's going on. We're going to look at the US Swiss franc trade, or trades that we've been taking, and working out quite perfectly, if I do say so myself. We've started incorporating a different perspective, incorporating the RSI in a very unique way, combined with supply and demand, and it's been extremely helpful. Extremely helpful in finding some good trading opportunities. So we'll briefly go through those. But the main thing is I just wanted to run through gold. We'll take a look at nat gas because I think there's a trade setting up there. And we'll go through some of the major currency pairs. And then we'll stop at US Swiss franc. And we'll look at the current trade that we have open now. And I'll take any questions that you have about that trade. So if you have any questions about the trade, please write them in the chat and I'll answer them for you. All right, folks. All right, very good, very good. Welcome, welcome. Let's just do that. Beautiful. Good. All right. Hello, folks. Welcome, welcome. How's the microphone? Microphone check, check, check. 1, 2, 3. Looking good, sounding good. All right. So gold, what's going on with gold? Well, it looks like that 4-hour area of supply is holding quite nicely. We've previously pointed out that supply zone, and it was the one that was changing the dynamic of price. We had it contact 3 times, and now it's moving to the downside. Now, it looks like what we're getting is just this wall that is not allowing price to rally up. What could be happening here, considering what we've been seeing with the CFTC data, is this could be acting as an area where the banks are offloading their positions. So they rally up and then they offload their longs. Because when we look at the CFTC data, we can see that this is exactly what they're doing, right? Okay, look at here. Okay, look for the last 3 weeks what they've been doing with their positions. Okay, they used to have 327, latest 269, 271, 258. So they're decreasing. And this is what I've been talking about for the last several weeks. All right, did we know exactly when it was going to happen? No. How could you know? We are at all-time high scenarios. How would we know exactly when they were going to start dropping price? It's nearly impossible to know that. But what we could tell was that their interest in buying was dwindling. We could see that the bullishness indicator on our spreadsheet showing us that they were aggressively accumulating was turning into neutral. Okay, the sentiment was turning neutral. So they were losing interest in acquiring long positions. And as they were losing interest in acquiring long positions, retail traders were taking on that interest in acquiring long positions. And this is why I was warning everybody, don't get into a long position. Yeah, everybody was like, yeah, but why wouldn't you get into a long position? You know, when price is doing that, of course you're going to say, oh, why wouldn't you get into a long position? Well, because the indicators are there telling you that they're losing interest in longs. So why would you want to be accumulating a long? Okay. You don't want to be acquiring a long position when the banks are not focusing on acquiring a long position, even though price is going up. I mean, what would be your target? You know what I mean? Like, how long do you plan on holding it for? There's a lot of things that you should ask yourself if you're going to get into a position like that. So that supply is holding quite well. And when we open up the daily chart, you can see that there is demand lower down here in the chart. It has not been contacted yet. But this demand sits in a spot that is not correlated with any type of upward trend. So we don't have an upward trend here. And I know some of you might think, how can we not have an upward trend if price has been going upwards? Well, it all depends on what your definition of an upward trend is. Okay, we have a very strict definition of what an upward trend is. An upward trend has to be supported by the banks. If they don't create the structures to support an ascending structure with their buying, then the chances of more buying coming in are low. They have to come in with more buying. Excuse me one sec. Had an ant crawling on me. Here in Muskoka this time of year, you start getting ants coming in the house. So our definition of an uptrend is it has to be supported by the big banks. And if we see the structure and we see what they typically create when they're about to create an upward trend, if we see that being created, then we know that price is likely going to come into areas of demand, and then price is going to go higher from there. But we don't see that on the gold chart. So yes, it's coming into a demand zone, but the chances of this holding over time are lower because it's not an upward trend. Now, could we see price react from here to the upside? Sure. But what we would want to see, if it was going to be something that they're going to sustain, is we'd want to look at the lower time frame and see sustainable structures being built off of this area of demand. So it's too early to tell if they're going to do that. Just by looking at this right now, if they come into this area of demand, it's likely over time not going to hold. Okay. The spot for me that I would be interested in watching is this area here. Okay. This is an area of demand that is and was created within an uptrend. So if price was to drop down to here, very good chance that we would see them reaccumulate. And we did some analysis for members. I'm not going to go into too much detail, but this demand zone is extremely high odds for holding because it's got a perfect correlation with the rest of the markets. Okay, I'll just say that. So I'll leave you with that. Okay, so just continue to watch that. So over time, I expect gold to drop. And then very good odds that once it gets to the 3,000 area, that we'll see it rally up from there. All right, Nat Gas, been watching this one. Came into demand. I told everybody, watch for a long signal and take a look. Over the next couple days, we get a big rally forming. Pretty incredible. So I'm looking for a long signal on this one. One of the things I'll be looking for, see, this is the wonderful thing about the RSI and using it the way that we are using it, because you could time entries extremely well. Take, for instance, this drop here. Okay, if you take a look at that drop and you take a look at the RSI from that drop, look how low, below 60 it was. Okay, extremely low. So that tells me that there's likely going to be another push to the downside before it goes higher. Now, the reason why I suspect it's going to go higher is because there's institutional demand that is in play right now. Okay? That's why I suspect that it will go higher. So I'll be looking for price to drop and for RSI to be above 40 to give me the signal that price is going to go higher. And I can use this next drop as a spot to base my risk off of. So when price drops here and starts to create structures to the upside, I can enter into a long position with my stop loss below that low and ride the wave. Okay. I think this is just setting up to really take off. Okay, we have targets a lot higher up on the chart. So Nat Gas is looking good, and this reaction to the upside, beautiful. It's exactly what we were watching for. All right, Dixie. Dixie's hitting demand, as you can see on the weekly chart right there, right next to my picture frame. hitting demand. So we suspect over time, price is going to go up. All right. So, and then we'll come into some supply up there. So when it comes to the dollar pairs, we are seeing a big correlation that price is going to be heading higher. And this is one of the reasons why I am getting ready for a long trade on the US Swiss franc. One that I think is going to make me the most amount of money out of the trades that I've been taking on it. Last week it took a long, made profits on it. Today took a short, making profits. Or yesterday took a short, I'm making profits on it. But I think the bigger move is going to be the one that is going to go much higher than what we just recently went to. So all the dollar pairs are showing us that strength is what's going to be in play over the next couple weeks. So Aussie, it's got supply just above price. If you look at the monthly time frame, it is showing strength. Okay. It's got a little bit more to go until it comes into this area of supply. At that point, I think we might start to see Aussie drop back down again. So there could be some nice signals there. I'll be watching the daily time frame when it enters into that. I'm sure RSI is sitting around 60 at this time, but if it goes higher, RSI will be above 60. I'll wait for it to drop. Watch for the RSI to rally up into 60, and then could be a short trade there for a move to the downside. Okay, so I'm going to be watching that for a trade signal. Euro US dollar. This one's been stalling up at these highs. And I was thinking about taking a short on here because I suspected shorts were the way to go just by looking at the overall markets and looking at the correlations. And short was the way to go. The only thing is that when you look at the structures here, it's very difficult to pinpoint exactly what time frame you need to be looking at, because one of the things that makes incorporating the RSI with the supply and demand analysis that we do, okay, the Sherlock system. The Sherlock system is about looking at the charts, figuring out what supply or demand zone price is hitting, and then determining where it is in the overall story of price. Okay, is it supposed to drop from that area of supply, or is that supply zone supposed to be removed? And why is that? What's happening on the overall story that's dictating that this move is supposed to happen? So Sherlock system is about investigating the charts to determine what the storyline is, right? Just like a detective would come to a crime scene and determine what took place to find out who the murderer is. We're trying to determine what the path of price is going to be. So the Sherlock system is about examining the charts, figuring out what the big storyline is, what supply and demand zones are being contacted, and what is supposed to happen. Are those zones supposed to hold or be taken out? And if they're supposed to hold, then we need to determine what's the next chart time frame that we should be focusing our attention on. Because whatever happens on one time frame is to help facilitate what's happening on another time frame. All right, once you know that, then you know what time frame to be looking at. And when you know what time frame to be looking at, then you know what time frame to be watching your indicators on, all right, like the RSI. RSI is the only indicator I use, okay, because it's extremely, extremely helpful when timing entries into positions and just having a better idea of whether or not you should be waiting for a trade signal, okay. Also gives you a very good indication of whether or not a zone is likely to hold or not, okay? Our analysis is very good at determining whether a zone should hold based on what we call the sequence. But combining that with the RSI, it's just so perfect. It works so perfect together. So, was I interested in shorting Euro US dollar? Yeah. Yeah, I was interested in shorting the Euro US dollar, but the structure is not good. I don't like it. It's not a good odds trade for me. Do I suspect that, over time we're going to see a drop here? Okay, on the weekly time frame? Yeah, I do. I do. But when it comes down to this ascending trend line, there might be some funny business here. I don't know exactly the path that price is going to take, so I skip it. Okay? And then we go to the pound US dollar. Pound is contacting some supply again. Okay, first time we contacted this supply was here. RSI was slightly above 60, and now we're contacting this supply again, and RSI is at 60. Interesting. So there's a good chance that we see price start to decline from here. Now, could there be a short signal? Yeah, sure there could be. And I've been mentioning this already to students. We're going to be watching the daily time frame. So if you look at the daily time frame, look at the RSI. Look how above 60 it is. Okay. So this has really got to tire itself out because it's too strong. It's got to tire itself out before it can drop. All right. So we have to see a rally hitting 60, turning over, and then we can have our short signal. Okay. It's a good chance that it will drop. Very good chance, but it's just not there yet. I'll be watching for the short signal though. I definitely will. Kiwi rallying up. Nothing here to trade off of. It rallied up. We know why it rallied up, because down here at the lows, the institution's short positions, they create an all-time maximum size. They've never been so short in the history of positioning on the Kiwi. And so, as I mentioned in the previous Arujo reports a few weeks back, many weeks back, that because they were reaching maximum size, they were going to start closing their positions, which was going to fuel a move to the upside. And this is exactly what we got, this move to the upside. So do I want to short it now? No, I don't think this is one of those charts that are good for shorting, so I skip it. US CAD, just sitting and marinating down here. That's what price is doing. It's just marinating, ready to be thrown on the grill. But it's not going to be thrown on the grill anytime soon. Okay, let it just sit, do its thing. Do I think over time that it's going to go higher? Yes, I think over time it's going to go higher. But in timing a trade, I wouldn't want to time a trade on this chart, so I don't bother. US Swiss. So this is the one that we took our initial long signal last week based on looking at the RSI here on this dip. Okay, RSI in the dip came down to 40, which signaled to us that price was going to rally up. So we took a long trade. That was our long signal. We took a long trade and it was extremely profitable. All right, and we closed it up at the highs for profits. We even added to our position somewhere around here. I can't remember exactly where it was, but I gave the details on our social media channels, on X, on our Telegram channel. If you're not part of our Telegram channel, you got to get on there, because I'm giving you away these signals right now. For now, I don't know how much longer I'm going to be doing this, but I'm just giving away these signals to you guys for now. We had a really good long trade. We closed it up here at the highs, and then we entered into a short trade because we saw the, first of all, listen, this move up here, if you look at the daily time frame, look how weak, when price came down here, look how weak it was. Look how weak the RSI was, which is telling us that there's going to have to be some kind of a drop to produce a stronger RSI before the bigger move to the upside takes place. So this is why we took that short trade, was with the anticipation of that drop. So I switched it down to a 1 hour chart, 1 hour time frame, and this is what we were looking at. Okay, I was waiting for the RSI to give me a weak signal because we were topping up, we were topping out here at the highs. All right, but when we were looking at the RSI, we could see RSI on these tops were very strong. So I was waiting for a rally up to produce a weak RSI, and it did that right here. Okay, that's where it gave us the signal. You see, the rally up, weak RSI, and that was the trigger. I put my stop loss above the highs, entered in here, and my 2-to-1 target was here. I took 1/3 off, which basically makes the trade risk-free, 100% risk-free. I don't move my stop. So even if my stop got hit, it would be a break-even trade. Okay, but I didn't want to move my stop loss to my break-even point because I wanted to leave my stop exactly where it should be, okay? Many times if you move your stop to break even, you'll end up getting stopped out and then the trade moves in your favor. So I wanted to avoid that. So 2-to-1 risk-free trade. I don't have to worry anymore. I can focus on trading other assets and focusing on doing other things with my time and being very objective when doing my analysis. Sometimes when you're in a trade and you really need it to work out, you could turn a little bit subjective, and you don't want to do that. You want to remain completely objective when you're doing your analysis. All right. So price came down. Now we're starting to get the rally up. This is when most traders tend to freak out because they ride the wave to the downside and they see their profits on their account. They're looking at their P&L and they're like, oh, this is wonderful. This is looking really good. I'm making a lot of money on this trade. And then all of a sudden, price starts to rally up and they start to see those profits dwindle. And this is when they freak out. And this is when they usually exit their trades. And I know because I used to be that person too when I first started trading. And you will feel this way if you don't feel very confident in your knowledge about the markets. But in my analysis, what I am seeing here is very, very good odds that, yes, this move was going to happen to the upside. It had to happen. Look how weak RSI got. When it becomes oversold, there has to be a retracement so that it can go back down into oversold territory again, all right? When the objective is to push price lower, okay? So you need to understand context. That's why the Sherlock analysis process is so powerful, because when you know the storyline, you can just follow it along. And RSI just works so perfectly with that. So we suspect price is going to continue to the downside. And I mentioned already that if the RSI got above 60 here, then I would be thinking about potentially closing the trade earlier, because this would signal to me that strength is starting to build. I don't want too much strength on this rally up here, because that's not what is supposed to be taking place. Okay? This is supposed to be just like a relief rally, but not a strength rally, if that makes any sense. It's not supposed to be a strong rally that's going to sustain itself. It's just a small little bounce up before the eventual move lower. So I'm watching that RSI, making sure it doesn't get above 60. And if we turn over now and start heading lower with that RSI below 60, it's a perfect situation. Okay. We also have a 4-hour area of supply that was just recently created here. So if price does get up there, we also have that area that could produce a move to the downside. RSI would be well below 60 when it reaches that supply. So that would be in our odds that price would continue downwards from that area. So I'm really not too concerned about this trade. Well, I'm not concerned at all about this trade. It'll play out whatever way it wants to. I'm just remaining as objective as possible, following what I see taking place on the charts. And if it starts to build momentum to the upside, then maybe that's the signal that we're going to start making a move. Because I think over time, we're going to be heading higher. Okay, I'm pretty sure of that. Okay, about 90% sure that we're going to head higher. So this move up that I caught, that I made some good returns on, that's nothing compared to what's coming. And so that is the trade that I'm really excited about, and I'm really wanting to make sure I catch before it takes off on me, all right? This short trade was a nice little bonus. I just wanted to get a little bit lower so I can get that final target. It would be really nice to see that happen. But if it doesn't happen, that's fine. My eyes really are on the longer term upward move that we have coming. All right. So US dollar, Japanese yen. What's taking place? Well, if you take a look at the weekly chart, you'll see something. You'll see that demand is in play. This is an institutional demand zone. All right. If we take a look at RSI, when it came into this demand, it was weak, below 40. So that means that we could get some kind of a stalling action before a bigger move to the upside. But move to the upside is definitely in the books. If we look at the US dollar, Japanese yen, CFTC data, look at April 22nd, 2025. Look at short positions. That's an all-time maximum size. They've never been so short. Okay, they just keep creating new records. And if you remember, probably a few weeks ago or a couple months ago, I was telling you they could keep on creating new records here. And this is exactly what they've been doing, creating new records. But for how long are they going to create these new records? Eventually, they're going to have to take profits on their short positions, which is going to fuel a move to the upside. So I think now is a better time than ever because we are actually contacting institutional demand when other dollar-led pairs are contacting demand zones as well. So it's high odds that we see a move to the upside from here. So I am watching that. Could there be a trade signal? Yes, there definitely could be a trade signal. I am watching that. One of the things that I'm watching is the daily time frame. Okay, so take a look at the daily time frame. When we contacted demand, take a look at how weak the RSI was. Okay, very weak. Then we got the rally, and then we're getting the dip. Look at where RSI is on this dip. Pretty darn close, eh? We reached 38. That's pretty darn close to 40. So we could be getting the beginning of the rally right now. It could be happening. That's why I am looking at this chart and combining it with what I'm seeing with the US Swiss. And this is why I'm saying that there's a good chance that we do see price just start to rally up from this area. All right. I think it's a little bit too early to tell, but we'll continue to monitor this. But this could be a nice long trade. How would I enter this? Well, let's switch this down to the 1 hour time frame. If this is the low, okay, on the daily, because remember, we're moving down here. Here's the daily time frame. So we got this first dip into demand and then the second dip, right, which doesn't hit demand. We switch it to the 1 hour. So this is the first dip into demand where the RSI was extremely low on the daily. This is the second dip. So if we watch here for strength, starting to build, you look at the RSI, and take a look here. That first dip, extremely weak. We got a slight dip here, okay, just above 40, and now we're getting another one here, another drop. And look at the RSI here, okay? It's holding above 40. So if we get a pause, and then we start to get a rally, momentum rally up here, and we see it's holding above 40. This low here could very well be the low of price before we shoot up. Okay, just saying. It's a very, very early target, early entry, but this could be the very low before price heads up. Okay, I think it's it'd be dangerous to be just focusing on that because again, we're making assumptions that price is going to start heading up from here, right? Because we are seeing it move down. We're assuming it's going to start heading higher from here. What it could do is just move a little bit up, come down even more, and then start the move. It could do that too, all right? So I'd prefer to be patient and watch how this unfolds on the daily time frame first. Once it proves to me that it's starting to build momentum and shift it to the upside, then we can look at the lower time frames, look at the dynamic of how that is playing out, and then determine if there's an entry signal there. All right. I asked if you had any questions about the trades. I would review them. Check out Euro US dollar. I did. I'm short on Euro since April 22nd. That's good. No voice. Now, okay. Bitcoin. What do you think? What do I think about Bitcoin? Well, let me see. It's hitting some supply. As I mentioned, we would have a range. Okay. We have supply there. We have demand down at the lows. And we briefly dipped past those that demand zone, but it held. Price is coming up into supply again. It could hold. It could drop. It could rally up. It's hard to say what's going to happen. Okay. Looking at the dynamic of what's taking place, it fell short of hitting the demand here on the monthly time frame, which is a little bit disappointing because I was waiting for it to come down into that demand zone so I could look for a long signal. So it didn't get down there. So we'll see what happens. I'm just waiting. we have a demand here on the 4-hour time frame. If price was going to drop down back to this area of demand, this has to be taken out first, and that will signal a move to the downside. So I would just be patient. I wouldn't be trading this right now. I don't see any good opportunities personally for this, okay? All right, folks. That's it. I will let you guys go. I think we covered a lot. Hopefully it was helpful. And hopefully you got something out of that. And hopefully you're taking part in some of these trades that I've been giving to you guys for free. And if you want to learn more about how we do the trading here, you can join us. We'd love to have you. Here's what we're doing right now, Bank Trading Masterclass. It started back on April 14th. We just did our not last session, but the last session of this class was yesterday. And we have more that we're doing every single Monday. We'd love to have you. We got a lot more to share with you, a lot more information to give you. So love to see you. And that's it. You take care. Enjoy the rest of your day. And so long, everybody.